Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by Bryan Beach of Venture Value. And Bryan, I've been looking at this chart that Stansberry Research has put together. Let's put it up now. It shows the performance of the Stansberry SaaS composite over the performance of S&P 500 and Nasdaq. And what we see here is that the Stansberry SaaS composite is up 54%, and that's during a global pandemic.
Yeah,
You're a SaaS guy. What's the deal with SaaS?
yeah. What that is, first of all, software SaaS stands for software as a service, and Alan Gula and Mike DiBiase and a couple of our analysts gathered all the pure SaaS companies together, put them in an index, and yeah, they're up 54% versus the 4% for the broader market. And the first thing is these are just cool products, Jessica, that are thriving during a pandemic because they enable stuff like what we're doing right now. This is a Slack. Slack is an example. We've been slacking this morning. Zoom, Ring Central, that's what's the technology that's facilitating this call. Those are software as a service companies.
What are basically the three main tenets that make SaaS so popular with consumers, first of all?
Really, SaaS has been popular. It's been the hottest sector of the market for probably 5 years. Okay, so it predates the pandemic, and it's going to be hot, after the pandemic. What happened is companies were loading the software on their own servers and allowing their customers to access it in the cloud. Totally new way of delivering the software. And best of all, instead of this huge upfront payment, you can now charge it by a monthly installment or a yearly installment, so everyone could afford it. So this has been good for the customers, but it's also been very good for the sellers of software, because what we found is if you've got a good product, people are going to renew year after year after year. And so while your upfront costs are lower, if you've got a good product that people are renewing, 1 year of revenue is as good as 5 years, because they're just going to keep on renewing. And so it's benefited both parties, both the customers and the people who are selling the software.
Yeah, I think when we initially talked about this idea, this is kind of like what makes Stansberry Research successful, is they have a body of reliable subscribers who subscribe to the product, and it
Yeah.
allows the people that work for the company to be more innovative because they have cash flow.
Yeah, exactly. Once you've got a stable of reliable revenue that you know is coming in, you are going to, it's just an easier way to run a business. Participants in the stock market, speculators, some of them, are beginning to appreciate this model, and so they're starting to pay a premium for anything that has SaaS in the name, or anything that's selling a SaaS story. And so, yeah, these stocks are becoming incredibly popular for that reason. The stock market is really bought into this story and this model.
How do you find the next one? I mean, this is really what you do at Venture Value. A lot of
Oh,
digging.
yeah.
How do you dig, and how do you get these picks that go up hundreds of percentage points like you do?
What we look for is hidden SaaS companies. Okay, they've got the SaaS technology, or they are transitioning to that SaaS technology or business model, and the market doesn't realize it yet. So the market does not yet have that premium on it. GAN is a great example of that. It is a SaaS business. It's not a traditional SaaS business. It's not a cloud-based business, but a lot of their revenues are SaaS-based. But nobody followed the company when we recommended it back in October, because it was trading in a smaller London exchange. The London investors weren't interested in it because it was an American company. The American investors weren't interested in it because it was trading in London. But it really was a pretty cool product with selling some nice software. And so we knew that Dermot Smurfit was planning on listing on the NASDAQ, and we thought that once that happened and some other things happened, this hidden SaaS company would come to the light. And sure enough, it's up, I don't know, 300 or 400% since October. They're not all going to work out that way, but that's exactly what we're looking for, Jessica, is just kind of a company that's hidden somehow, whether it be they're transitioning into a SaaS model and the market doesn't realize it yet, or they're trading on some exchange that people don't pay as much attention to. And I'm privileged to be able to work with these small markets that you can find those hidden opportunities.
Thanks so much, Bryan, for your expertise on SaaS companies and how they are not only going to thrive during the pandemic, but survive and thrive outside and beyond
Oh
the
yeah.
pandemic as well. For those of you who want more of Bryan's insights, please hover on the screen and we'll connect you to Venture Value. You can get a subscription link there. Also, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, LinkedIn, and Twitter. That's all for now. Thanks for watching.